It is 8:31, and the soaring cost of cars is causing thousands of people to be upside down on their loans.
Oh, yeah, it's a big problem. Finance professor Dan Roccato joins us live with advice, though, on how to prevent your car loan from hurting your credit score. All right, Dan, the man, are you still on the other side of the pond?
I am indeed.
I knew it.
Those European models when it comes to weather.
Oh, that's great. Well, we're so happy to see you. Thank you for taking time to join us. I tell you what, we're at historic highs on car payments. What is going on with this? There is a number of reasons we're in this position.
Yeah, not so great news here, Mel. And hi, DeLon, how are you? Here's how we got here. The average new vehicle right now is about 48 grand. You could buy a house for that at one time. The average car loan is 70 months, which is incredible. And more importantly, vehicles lose about 60% of their value after 3 years. So that first ride home from the dealership is probably the most expensive ride you'll ever have in your lifetime. And that's why a lot of these loans are underwater.
So what exactly can you do to prevent this? I've heard you can pay more on your loan than what it actually is. I know some people actually, I ended up leasing a vehicle just for this reason. What can you actually do?
Yeah, and that really is the question. Obviously, you can make a bigger down payment. My rule of thumb, DeLon, is if you can't put down at least 20%, you probably can't afford that vehicle or shouldn't be in it. Maybe go for a shorter term loan so you don't have that massive depreciation hit. Maybe a used vehicle instead of a new vehicle. But we've got to get creative here, guys, because 20% of all trade-ins right now are underwater, which means they're rolling the old loan into the new loan. Financial suicide.
Well, a lot of times the old saying is drive it until the wheels fall off. So is it time just to maybe stretch and unfortunately maybe pay a few little problems on the car to just keep it running?
Yeah, great question, Mel. You know me. You remember that I've got a 99 truck. It's got enough miles to get to Venus and back on it. And that thing just keeps going, Mel. I'm going to keep it until what you said, until the wheels fall off of it. But not a bad idea. But listen, at the end of the day, you need a safe, reliable vehicle. So at some point, I'm going to have to replace it.
And then we're taking a look here again. If you're already underwater, what you can do, those things that we are walking everyone through.
Yep. Number one, make some extra payments if you can afford it. Try to get ahead of this thing if you can. Consider a private sale instead of a trade-in. You'll get a higher value. That'll help pay off that loan. And finally, Mel, as you said, keep it. You know, if you can keep that thing going safely on the road, that's probably your best bet.
Any other tips for viewers who may be in, maybe in trouble right now, maybe dealing with this? They want a new car. They may not want to put more money into their used car. What else can they do?
Yeah, and that's a good question. And lots of consumers are in that exact same spot. Get creative is my answer. What I mean by that is you might be able to find that you've got 2 cars in your driveway. Maybe you only need 1. You might find that that car has a lot of downtime. Guess what? We've talked about this before. Put it on Turo, a peer-to-peer app, and let your car make some money for you. So, DeLon, there's all kinds of creative ways that you and I can chip away at that problem. But just letting it sit in the driveway ain't going to help.
No, not at all. Well, Dan, enjoy your time away. And I should say good afternoon to you. So enjoy your day, and we'll see you soon.
Thanks, guys. See you next week
All right.
stateside.